Now we're really live. Really. Okay. Hey guys, we are coming at you live. Evan Einhorn and I, Evan Einhorn with Modern Home Lending and Chris Mincola with the Mincola Group over at West USA Realty. And first of all, happy Thanksgiving to everybody.
Yeah.
Happy holiday. Today we're going to be talking about a true legit rent-to-own program.
Mm-hmm.
We've talked about down payment assistance programs before. If you can buy now, you should. You definitely should buy now. Excuse the casual attire here, too. I just ran from Costco, and it was a nightmare. Avoid Costco if possible, but their pies are good. So, anyways, we are going to be talking about rent-to-own program today that will blow your mind, and it's totally legit. Hard to find a good one that is. A lot of times people get taken on those. I've heard a lot of stories. I've experienced a lot of that with some clients that we've had. So want to make sure you know that we're totally legit here, and we're going to be talking about this fantastic program. If you or anyone you know is renting and they're not quite ready to buy because they're maybe in a flux situation, or maybe they don't quite qualify yet, this would be a way for them to definitely gain some equity, and Evan's going to talk about that while they're renting. So why rent and not gain equity, but not have the obligation of buying if you want the out? Let's talk about that, Evan.
Yeah. So happy early Thanksgiving, everyone. Nice to be here on the Wednesday before. So new program, like I said, we help a ton of people qualify for homes that honestly come to us and they don't think they can qualify. So that's the first step. If you'll be somewhere for at least a few years, typically it makes sense to buy. Everyone's situation is different, but that's what we're here for, to help you, compare options. But yeah, this rent to own program, it's new. It's from an organization that, they're not for profit. So they're not out there trying to make a ton of money. Their goal is actually to get people into homes. So when you see rent to own advertised a lot, lots of times it's a seller trying to make extra money, by charging you extra lease payments, and then you have the option, or it's an organization trying to make extra money by, collecting expensive rent or a large deposit, and then you get to buy down the road just because they're taking advantage of that, you getting into them. This is different. This is an actual organization. Their primary purpose is to help people get into homes. So they know everyone doesn't qualify right away, and it's perfect for them. Whether it's you don't have your down payment, you just started a new job that you've only been at for a couple of months and you had a big job gap or something. Let's say you just started a business. So there's a lot of reasons why you might not be qualified right away. You just started a business 2 months ago, it's going well, but most loan programs don't allow for that. So lots of reasons to use it. On a high level, basically what it is this organization, you'll go out shopping with Chris and Cindy after you're pre-qualified for the program, after you're pre-approved for the program. You'll go out shopping, and then you'll make an offer on the home. And basically this company will buy the home for you. And while you work on whatever situation it is, while you work on credit, while you work on saving a down payment, or while you're working on, maybe income or being at your job longer, etc., you'll lease the home from them. So that's the beauty of it, that they're not going to charge you. There's a $35 monthly fee on top of their mortgage. So you're really just paying their mortgage for them. It's not like they're not going to charge you such high rent out there necessarily. So you pay rent, until you can buy. And once you're ready to buy, you can, you're able to buy it from them for only 1% more than what they paid. So let's say they bought the home for $200,000. 3 years from now, you can buy it for $202,000, no matter what the prices are. Even if it's worth $230,000, $240,000, $250,000, your price is $202,000. It's 1% more. So that's.
Wait, let's emphasize that for a second. Say that again, because if you're going to rent now, or between now and the next year, 2, 3 years, it would make no sense to spend all the deposits that would basically equal this,
right,
pretty much, on an average house in Arizona.
Right.
And not potentially gain the equity, or you can just say goodbye like you would anyway on any rental. Say that again. Say what you just said, Evan.
Yep. So basically, once you're pre-approved with this program, they'll buy the house for you, and whenever you're ready to buy, they will make you sign a 3 to 5 year lease. But let's say you're ready to buy in 6 months, they'll sell it to you for 1% more. That's it. So it's not like they're buying it for 200, they'll sell it to you for 202,000, even if it's worth 220 or 215 or 210. You know what I mean? And here's the nice thing that goes above and beyond. Let's say they buy it for 200, they're going to sell it to you for 202. The value goes up to 215. At that point, that extra $13,000 difference between the 202 and 215, they can give you as a gift of equity. So you don't even need to come up with the down payment at that point. As long as you're pre-approved for the mortgage, but you can use that towards your down payment. So if the value goes up, which historically over time, real estate goes up and down, but averages an upward trend. If it goes up enough to cover your down payment, you might not need to come out of pocket with anything down the line. So
you go by 1% of the original purchase price, or the 1% at the time of the equity. It would be at the original purchase price, right?
It's the original purchase price. So if they bought it for 300, they'll sell it to you for 303. You know what I mean? So that's huge. And then the nice thing is too, not who knows what's for the future. I don't think it's going to happen, but I have some people say, hey, what if real estate goes down a bit? You don't have to buy the home. It's an option.
Right.
You know what I mean? That's the beauty of it. Is let's say, hey, you're moving from California to Arizona because it's cheaper out here, but you've never lived in Arizona. Maybe you can't handle the heat and you want to move back to California 2 years later. You're not obligated to buy.
Right.
That's the beauty of this program is, hey, it locks in your price. It actually locks in your rate too, because they're pulling out a mortgage on your behalf, and then you can take over that mortgage.
Right.
So it locks in your rate, it locks in your purchase price, and you can wait the full 3 years and then decide, hey, I want to buy this, great. Or hey, you know what? We don't really like the area. We want to go somewhere else. So.
And if rates are lower than when they bought it, they can always refinance, right? So
so you don't even need to refinance. So whenever they're ready to buy, they can choose to either take over the mortgage that was originally taken out by this organization, or they can get a new mortgage for whatever the rates are. So it does offer, on a high level, this offers clients options that if you're not sure you're going to buy, or you're not sure if you're going to stay in the area for a while, or you just started a new job and you want to see how it goes, this is a great program that, you might as well do this now versus rent for 2 years and then buy 2 years down the road, because who knows what rates will be, who knows what prices will be.
And I know pretty much across the board, Evan, even if someone's going to be renting, most homes that they're going to rent, landlords, especially if it's listed on the MLS, are going to require, like at least a 550 minimum, or 580, maybe even 600 or more credit score to qualify for a rental in general. Mm-hmm. Okay. And then they're going to want, to see, a certain amount of income. Usually it's 2.5, 3 times the amount of the rent, plus 2.5, maybe 3 times the amount of total deposits in first month's rent. So this makes total sense. What's the lowest credit score somebody can get in on this? So
they request a 580 score. With that being said, though, they do have exceptions. So if your income's strong, if you have extra money in the bank, they don't necessarily need a 580. So that's on a case-to-case basis. We would submit it to them. So, especially if you're close, if you're at a 560, 570,
that's awesome.
They understand their goal is to get people into homes. If you're at a 560 and you haven't made your rent payments on time, that's a different story. But if you're at a 560, you're obviously demonstrating that you're on-time rental history, you have some money in the bank, you don't have $0. They will make case-by-case exceptions, and it doesn't cost anything, to apply and try.
Right.
And I'm here through the whole process. Applying for a mortgage is easy. This is just as easy.
And the cool thing is, this has to be on new homes. So you go to a new home builder. Evan can make this happen.
Yep.
I was telling this to somebody at a new home build yesterday, a salesperson at new home, and they were like, "Give me that guy's phone number." You get a call from somebody. That's who. But this is for new homes or homes that are 10 years old or remodels, right?
Yeah. So basically, new homes, something built within the last 10 years, or a good amount of renovations in the last 10 years. So it can't be a home that was built in the 1950s that has original plumbing and electric. And because they want to make sure that there's going to be not too many issues during the lease period, and they want to make sure that, hey, if you're struggling to be a homeowner, they don't want to put you in a home that has a lot of issues. But that's where home warranty comes into play. So
we talked about that before. You don't have to have a ton of money saved up for an air conditioner or whatever. You just have a home warranty and you're covered.
Right.
And any other qualifications they need to know about besides minutia that nobody can really hear about?
Yeah, I mean, there's a ton of different things. But the nice thing about this is they're only looking at your past couple months of income, and assets. So, for a mortgage, we need to document a 2-year history of work. This, not necessarily. This makes sense. Like I said, if I think it makes sense for a few reasons. One, if you're unsure if you're going to stay in the home for a while, you might as well do this versus just rent a random home, because then you have the option to buy at a cheaper price potentially. Two, people that don't have enough down payment and can't use down payment assistance for some reason, that's probably not going to be as much as the third category of as far as income. Maybe there's some weird reason that you can't qualify for a mortgage. So,
like for instance, job gaps.
Job gaps, yeah. So let's say like FHA's rules are if you have more than a 6-month job gap, you need to be on your new job for 6 months, and we need to document a 2-year history prior. So, or self-employment. Like I know a lot of people with the economy going strong, they're deciding, hey, I want to start my own business. And a lot of those people are doing well. They're starting their business. They might be 6 months, 8 months in. Typically, and again, we have special programs depending on the down payment. Typically, you need 2 years self-employment to use a regular program. Here, you can start renting. They'll look at your last few months of bank statements and all that, and then see how your business is doing. If it's doing fine, they'll let you lease the home, and then once you're officially qualified for a new mortgage, then you can buy the home. And like I said, the beauty of it is you can either get a new mortgage through the lender, or you can take over their mortgage. So you have the option of, if rates are better in the future or rates are better now, you can take over whichever mortgage you want. Rates, I mean, if you Google, like, don't even take my word for it, Google interest rate forecast, rates are expected to go up. So it's like a nice insurance policy that if rates go up and or prices go up, which I'm expecting both, nothing's ever a sure thing, but all the experts are expecting it. This locks you in, and you have insurance, either way.
Yeah, we've talked about it before where people are waiting, because they want to save more money up or maybe get a little bit better credit score. But we've talked about in the past where somebody with a 580 credit score a year ago maybe, better off, going in sooner rather than waiting, the 12 months that they waited and end up, with a higher credit score. But the interest rates have gone up so much,
right?
It doesn't matter. So in a nutshell, they're basically kind of take some common sense approach with the person who wants to rent to own, rather than only certain regulations and all that, like with the mortgage process,
right.
That are strictly the way they are, and that's it. So that's good for the person who wants to buy for sure, because there's definitely a higher chance of getting into the program. Anything else that you think they need to know? I mean, I would just say, look, guys, if you rent, you know anybody who rents, and you don't have at least a 580 credit score with a 2-year work history, or Evan can get people qualified if they have enough to put down with less work history and all that kind of stuff. But for those who don't,
I mean,
there's the down payment assistance programs, 580 on up credit scores. DTI has to be at a certain amount, but he's got programs that allow higher than usual. But those who have job gaps, those are maybe below a 580. Evan can boost the scores, look at that, give you the scenarios, and then see if this program would work out better than something else, especially if you're not ready to commit to a purchase,
right?
Or an area or whatever. Or
people, that's totally understand that hey, you're qualified to buy, but you're not 100% sure if you want to stay in that area, or hey, maybe you just got engaged and you want to see what happens after marriage or something. Like, there's so many different scenarios that can play into it. Whatever your personal situation is, this gives you options. And like I said, it's almost like locking in a rate and locking in a price, so you have the insurance and so you can go either way. I wish there was a way we could talk to every single renter in Arizona, because there's no
reason not to do this. I mean, if you're going to rent,
right? Like, home ownership is near a low, which is kind of crazy because guidelines have loosened up. So this organization, their goal is literally to increase home ownership, because they know home ownership, helps communities, helps, stabilize. You don't need to worry about rents going up, etc. So it just helps grow wealth.
Right. So. Well, hey, anything else you think we need to share with them about this program, or anything else they should know for the day?
I mean, give me a call. We can talk about your specific situation to see if there's any reasons why you wouldn't qualify. But I mean, if you're renting, they're not going to help.
Like a broken record, but it's so true. If you're renting, why wouldn't you do this?
Right. If you're renting, you know what I mean? Like, a landlord or apartment complex is going to run credit and run stuff anyways, and they'll be flexible. I mean, you can't have a 400 credit score and go with this program, but there's some qualifications, but they're not that strict. They're really trying to help people get into home ownership, and they know once you're in the home, if you really want that home, then they'll help you qualify for the loan, and you don't have to worry about, hey, oh my gosh, my lease is up in 30 days or 40 days or 50 days. I need to try to qualify before then. I need to save so much money. I need to do this, do that. You have time. You're already in the home. You're not going to have to pack up and move again. I mean, for me, that's the biggest headache, is just packing and moving. That takes so much time and is a distraction,
And guys, when you buy a home with us, we partner up with Muscular Moving Men. So Nicola Group can help you with your move. And we had a show on that before. So, but the cool thing about this is you could sit there for 3 years, and they'll even let you go beyond that as long as you're communicating with them, right? On this program, they'll work with you on going a little bit longer. You can go 3 years, basically renting like you would, paying deposits and all that like you normally would. But now you have the opportunity to lock in the rate, gain that equity over that year, 2 years, 3 years, whatever it is. Or say, I'm out of here in 6 months to 3 years and move on to the next property that you're going to buy or rent in another state or a city or wherever. It's kind of a no-brainer.
Right.
Don't qualify to buy now. It's kind of a no-brainer to do this.
Right.
And Evan is pretty much one of the only people I've ever heard with this program. So it would only make sense to call him. So how do they get a hold of you, Evan?
Yeah. You can call us 602-456-2273, or go to modernhomelending.com. All the contact information is there. Just want to open the dialogue with people and say, hey, does this make sense? Which it probably will.
I don't know.
So yeah, 602-456-2273 or modernhomelending.com. I'll be offline tomorrow for Thanksgiving, but if you guys want to call me Black Friday and shop for a mortgage or shop for a home, give me a call, or through the weekend as well. And then what about you, Chris? You gonna be around this weekend?
Yeah, we're going to be taking tomorrow off, unless anybody makes any special requests. We're planning on Friday off, and we'll probably be back at it on Saturday with clients showings and stuff like that. But yeah, if you guys need to get in touch with Cynthia and I and Miriam and our team here, you can reach us at 480-788-8569. You can call or text our team line there. And you can also check us out at mincolagroup.com or mincolahomes.com. So, guys, it's a no-brainer. You or anybody you know that rents, like you said, you may rent an apartment. Okay, you got a 400 credit score. Let's talk about what we can do for you in the future. But if you're even close to mid 500s or low 500s, talk to Evan. I saw Evan. You can ask my wife and our assistant Miriam. We had somebody recently who went from, what was it, 5 something to 8? What was it, 800? You got them to?
Yeah. Well, they went from, I think, no credit score, and a 580 to all 3 credit scores in the high 700s.
I couldn't believe it, and it was like in like a week or two. It seemed like.
It was within 30 days. It was just couple small suggestions that I gave. We're not a credit repair company, but there's some easy credit advice because I see it every day. We run 100, maybe 100 credit reports a month, so I see it every day. We know what works, we know what doesn't.
Right.
Give us a call, and we can definitely do some credit education. Even if you're not looking to buy for a while, or even if you're looking at doing this rent to own, we can definitely take a look. So.
That's the cool thing. Yeah, that's the cool thing. You can map it out for them and tell them, okay, do this, X will happen for the most part, unless, they don't do X. Yeah.
Right.
All right. Well, guys, reach out to us if you have any questions by phone or through our website or through here. Message us, and we'll talk to you next time. Happy Thanksgiving, everybody. Have a safe time. All right. And eat a lot.
Yeah.
All right.
Enjoy time off.
Yes. We'll talk to you.
Hopefully not too many people have to work in retail over the next couple of days, but take some time off of work, enjoy the holiday.
Exactly. Enjoy, guys. Thanks. We're here if you need anything.
Happy Thanksgiving. See you guys.
If you know anybody who rents, call us. All right? Call us. All right. Thanks.
See ya.